Analysts at Cardinal Stone Securities say they expect the Nigerian equities market to witness mixed sentiment as first quarter earnings of listed companies trickle in. Adebayo Adebanjo, senior analyst at Cardinal Stone Securities, joins me now for more on this discussion. Adebayo, thank you so much for joining us on the show today. Now, we are already having numbers trickle in, Q1 numbers. I just had a conversation earlier with the managing director of United Capital Africa, and looking at the print, total revenue flows, these has increased about 71% for the full year number and about 14.8% for just Q1. In terms of how these businesses are performing, which of these numbers have caught your interest, especially for the listed companies on the NGX?
Oh, that's a very great question, David. And so far, of all the earnings that were released so far, I would say the one that has caught my interest the most is Dangote Cement. And this was released just yesterday evening. And, for top line, the company recorded over 100% in the top line growth, which kind of speaks to what you already said. Companies are reporting, very, very strong top lines, for the year. And this is not really a surprise because of, how prices are already quite higher compared to last year, same period last year, with the high inflation we're seeing in the country. If you recall sometime, on this show where we discussed, how high cement prices were at the time, we still see that cement prices are still just as high. And, this is trickling into, the revenues we're seeing for these companies. However, of course, you also have to see the costs. The costs are also rising materially. And when you look at Danksem's performance, you'd see that very strong top line, but that did not translate into very strong bottom line as well. Net income was somewhere around 3% growth because of that, high cost. And then foreign exchange losses, we're not exactly done with the problems of foreign exchange losses. When you compare, where the currency was at the end of last year, even though the currency has witnessed some appreciation, most of those appreciation was seen in the month of April.
Yeah.
So Q1 didn't exactly capture those gains. That's what we're seeing, really outsized losses. Danksem reported over 64 billion in foreign exchange losses. So these issues still persist. I think I saw the numbers of Guinness as well, losses as well, called foreign exchange devaluation. So currency is still a problem, cost is still a problem, but top line is also rising because of the high inflationary environment.
Definitely, currency still remains a big issue, especially on the back of the Naira rebound, which we saw. The biggest hit we had was in February, but the big question is also whether or not the storm is finally over. And I was having that conversation just prior as well now. The recent depreciation, does that signal an end? How much of mixed sentiment is this also introducing, and what sort of print would come through going forward? But in terms of the momentum here now, let's also take a look at the banking stocks, for example. The race to submit the implementation plan for this recapitalization move elapses by the 30th of this month as well now. Let's talk about how the tier one banks, the banking stocks in general, are faring.
Okay, so typically, it's not a surprise. I mean, whenever you see announcements of this sort, it tends to bring shocks, to that sector whenever the CBN or whoever the regulator of that, sector is, right? And this is not a surprise, really. I typically expected that, the market would be typically, worried about what this means, for banks. And that's what was pretty much driving, the bearish sentiment. I mean, if you just look at the performance since the announcement on the 28th of March, when the CBN announced the recapitalization exercise, the banking index is down, has been down at 6%. It's the weakest performing index so far this year. It's down about 15% year to date. So this just shows you, how the market is feeling, about banking stocks. So it's not a real surprise, right? But of course, I think that, markets will always be volatile, and the ups and downs of markets is where, market participants are able to take advantage of, right? So even as, banking stocks are falling, and it's not exactly a great time, it also presents a great opportunity for re-entry, into these stocks. Because
let's quickly touch on the telcos now as well. We've also heard of MTN, also the explanatory notes to the annual general meeting, and then their conversations around tariff adjustments as well now. How do you see things going on there?
Well, honestly, the regulator has to really consider what's going on, in that sector, because, unlike other players, with rising price, being able to raise prices, telcos typically have to get permission from the regulator to adjust, tariffs. So, I think the regulator also has to, there has to be a sit down with the regulator to discuss, these challenges and see how, they can manage, the problems with, high inflation, high cost of operations, and as well as, protecting their own margins as well. So, I think it really boils down to how they're able to convince the regulator because honestly, telcos are also, taking,
The hits
receiving
as well, just like the end users, the consumers are also
exactly,
feeling the pinch of inflation.
definitely.
But we'll leave the conversation here for now and definitely catch up at a later time. Thank you, Adebayo. That was Adebayo Adebanjo, a senior analyst at Cardinal Stone Securities.